Hello everyone. So today's topic is bank statement, and in this video we are going to be just get the clarity on the basic concept of bank statement and what is EBS in SAP, and we'll see what is bank reconciliation statement. So basically, this video will clear your basic understanding. We are not going to be talk about configuration in detail, so we'll do it in the next video. So let's start. So first questions comes in our mind that what is bank statement. So it is very simple. So ledger of a customers, right? So which is maintained by bank. It could be any bank, HDFC Bank, SBI banks. In which bank account a customer has an account, right? So the ledger of a customer which is maintained by bank, that is called a bank statement. Here we are talking about the business, right? But individually in personal life, all of us have the bank accounts, right? Our saving bank account. So suppose if Mr. A has a saving account in SDFC Bank, right? So whatever the books of accounts is maintaining by the SDFC Bank, right? So because SDFC Bank have to maintain the ledger of Mr. A, right? How much he has deposited, how much he has spent. So everything, all the transactions, HDFC Bank has to maintain in their books of accounts. So whatever the books of accounts or ledger of Mr. A, HDFC Bank is maintaining. So that is simply called the bank statement for Mr. A, right? Even in the real business also, suppose we have the ABC Limited, right? So ABC Limited has opened one bank account in HDFC Bank, and now he is performing the bank transactions. Definitely we have opened in bank accounts to run the transactions, right? So we have to record all these transaction in books of accounts of ABC Limited, right? So ABC Limited has opened one uh, HDFC bank account. So now we'll see how transactions happens, how what is bank statements. Okay, let's see. So see here, this is the ABC Limited and the books of accounts of ABC Limited, and here we have the we can call it our business partner also. So he's HDFC Bank, right? So he also has their books of accounts. And suppose in HDFC Bank they have only 10 customers, just for an example. So this HDFC Bank has 10 customers, and bank has to be maintain ledger of all the customers, right? So what we do in day-to-day business, so we have some transactions, right? We perform some transactions in real business also, we do some transactions. So whatever the transactions are related to bank, so we are going to be discussed here. So suppose, just for an example, I have just purchased something from some vendor and now I am paying. So I paid something, some amounts via HDFC Bank. So this is called a business transaction. And suppose I sell something to some customer and I am receiving the money. So that is also a transaction, right? And bank has charged something, some commission, some interest, right? So this is called bank charges. So now we understood that main thing is the two things. One is the transactions, second is the books of accounts, right? So it will make us easy to understand what is bank statement. So now we have books of accounts of ABC Limited. Now we have books of accounts of SDFC Bank. And what we understood here, ledger of customer which maintained by bank is called bank statement, right? So suppose this in books of accounts of SDFC Bank is maintaining the ledger of Mr. A or ABC Limited. So that's called the bank statement. Oh, we'll see later here. Okay, now come. So main thing is in business are transactions. So now we have some transactions and we are going to be book in our books of accounts of ABC. And how we do book? How do we book these transactions? By creating the accounting entries, right? So suppose we have seen three transactions, right? So pay to bank, pay to vendor, and receive from customer, and bank charges. So what would be the accounting entries? So vendor debit to HDFC Bank, and if we receive the money, bank to customer. If bank charge to HDFC Bank. So these transactions, I have performed this transaction, right, in real time business. And so this is the books of accounts of A. And in similar way, bank will also maintain the ledger of ABC Limited and other customers, and is also going to perform some accounting entries. Okay, he has paid something to XYZ on behalf of ABC. He received something on behalf of ABC. He charged something in account of ABC, right? So something like that. Okay, so this is balance in books of accounts of SDFC Bank, right? So suppose have deposited something in bank account. ABC Limited has deposited something in SDFC Bank account. So this is kind of what? So this is a liability for bank, right? Because I have deposited and a bank is liable to pay me like 10,000 rupees, right? So if suppose bank has paid to some vendor on behalf of me, so this will be reduce the liability, right? And if suppose vendor, this bank has received something from customer, it will increase the liability, so like that. And if bank has charged something, right, so it is also increase the liability. So this is like kind of a transactions in bank, right? So we were talking about the transactions. So such kind of transactions is happening with the bank to ABC Limited. And bank is maintaining the ledger of ABC Limited, and that's called a bank statement for ABC Limited, right? So now we'll compare these both books of accounts. So because the main thing is transactions and second thing is books of accounts, right? Because there are two parties, bank and the ABC Limited, and these parties both are maintaining the books of accounts. And so see here, I have deposit 10,000, it is my assets. Bank make it as liability, and then I paid to vendor, it has decreased my balances. Now my balance is 9,000, and bank is saying okay, before this I was liable to pay 10,000, 1,000 I've already paid on behalf of you, now I'm liable to pay 9,000, right? So something like that. And suppose we have issue check but it's not clear. So what happens? So suppose 1,000 rupees I paid to vendor, right? So in my books of accounts, it is in ABC books of accounts, it is 9,000, right? But this check has I have given this check to vendor, but a vendor has not presented this check to bank, right? So still, bank is saying okay, I'm liable to pay 10,000. So check received but not deposited. Suppose I received check from customer, and I make the entry in my books of accounts, and now my balance is 12,000, but in bank its balance is 10,000. Why? Because I have not deposited this check, right? Even I deposited but it's not cleared, something like that. So in this way we can see there are differences, right, in both books of accounts. Anyways, we'll discuss later. And now that example is bank charges. So suppose this is the 10,000 and bank has charged something, but I am not aware about that, right? So once I'll receive the bank statement, then I'm only get to know that bank has charged something. Then I will increase this, sorry, decrease this balance, right? So bank liable to pay 10,000 and bank charge 1,000. Now bank is saying I'm liable to pay 9,000, something like that. So now as we are going to be discuss in this video what is bank statement. So all these transactions, right? Whatever transactions bank is recording in their customer accounts, right? This is the bank statements for us. So simple ledger of ABC received from bank account. This is the bank statement. We also have one term that is called the bank reconciliation statement, right? So ABC has done some transactions, bank has some transactions, right? We have seen here, see here, ABC has recorded these transactions, bank has recorded these transactions. But what happens, why we need this bank reconciliation statement? Because few transactions are recorded in ABC but not in bank account. What is that transactions? Say here, we have recorded this but bank has not recorded, right? And some transactions are like bank has recorded but we have not recorded. What is the example? Like the bank charges, because we did not receive your bank statement, that's why. Anyways, so and now we have to prepare one reconciliation statement, right? Because you know that every month we have to close the books of accounts, and quarterly public companies have to issue their profits loss in the financial statements, right? So it is mandatory for us to will check this EBS and the bank statement on day-to-day basis or on monthly basis. We have to be prepare the reconciliation account, right? So I'm not going to in context of SAP. I'm just we are just discussing simply what is bank statement now and what is the bank reconciliation statement. So we have seen that ABC has done some transactions and bank has recorded some transactions, but there are differences in transactions, right? If we'll see the balances in books of ABC and in books of bank, it has some differences, right? So how we can say that what is that difference if suppose we have like all the companies, it's mandatory that they have to be audit audited their books of accounts, right? So suppose auditor comes with us and says, okay, I have seen that this is the bank balance, and the balance in your books of accounts is this one 10,000, and bank is showing is 9,000. So what is the difference? What is that difference? So we have to prepare a bank reconciliation statement, and that reconciliation statement can clear, and we can note down all these details that what is the difference. So we knows in that example that the difference is bank charges, right? So we'll prepare a statement and we'll mention then this is the bank charges, the difference is bank charges 1000, and we'll say okay, this is my balance and difference of bank charges 1000 and the balance is 9000. I have not booked yet this bank charges in my books of account, that's why there is a difference. So like that we have to prepare this bank reconciliation statement. So now we understood that what is bank statement, right? So the main thing is two parties and bank and the company, or it could be individual, it could be partnership firm, right? So there are two parties and we have some transactions and both are managing their books of accounts. And when our bank we get some statements from bank, right? Or ledger, our ledger from bank, so that's called the bank statement for us. And we have also discussed one term that is called the bank reconciliation statement. So we have to prepare this bank reconciliation statement to get clarified that what is the difference, what bank has not recorded, what we have not recorded, right? So we have to be clear on this, and both balances should be matched, right? Even it's not matching, but we have to get the clarity what is the reason of that. So this is called the bank reconciliation statement. So I think now we are very clear that what is bank statement, what is two parties, and what are the transactions happens between the bank and company, and what is bank reconciliation statement. So now I'm coming in SAP, right? So in SAP actually we maintain these all these things in different way in terms of GLs, right? If I'll show you these accounting entries I've shown, this I have just booked vendor to bank, and this bank to customer, and bank charge to a bank, right? So but when we maintain our books of accounts in SAP, so we use a different way to manage this GL's account, right? So how we do manage? So actually for we have one GL account, right? That is called as HDFC Bank. But in SAP we to create three bank accounts, three GLs, right? Three GLs: incoming SDFC bank account, outgoing SDFC bank account, SDFC main account. So we do create three bank accounts. Why do we create? To get the clarity, right? So let's see how it works. So suppose this is the incoming is, you can understand by words, right? So it is like some money is coming, outgoing some money is going from bank. And the main account, what is that main account, how do we use, we'll see. So suppose there's a business business scenario that we have paid something to vendor. So we are not going to be shift to the HDFC main account. First, we'll just make this entry to outgoing account. So vendor account debit to HDFC outgoing account, right? So if from outgoing account, if I'll just execute them in FBL1 and oh sorry, yeah, in FBL3 n, if I'll execute this, and I can see what is the outgoing amounts for me. And in similar way, suppose so I've just done this entry, and later on what will happens, uh, suppose I given a check, right? Or if I've done some online transactions, so bank will also record this and pay it to this vendor. And when I get this statements, right, this statements from bank, what I will do, so now it is sure that bank has also booked this, reduced this amount and paid to the vendor. So now what I can do, I can just shift this outgoing account balance to main account. So this outgoing is knock off. Now what is balance, vendor to main account. So in this way we manage this GLC in SAP. And the main thing, whenever you will execute in a bill 3 n this main account, this balance, whatever the balance we have here, so it will be matched with your bank. Because see here, when we have given to check to vendor, we have book in outgoing account, when we receive the statement and we get to know that this check has been cleared, then we have transferred this outgoing to main account. See here, right? In similar way, it happens to customer. So if suppose there is a customer, then we'll book like incoming HDFC bank account to customer, and then once we'll receive the bank statement, we'll transfer this incoming to uh, main account, right? So in similar way, bank charges will happens. So this is the way how do we maintain these GLs in SAP. So hope you understood this, right? So see here, this is the ABC books of account. This is DEFC. I've just deposited 10,000, and now I booked in outgoing account 2,000, and now SDFC also paid to vendor, and now this is liability. Liability for SDFC is now 8,000, right? So I am going to receive a bank statement from bank, and then what I will do, as we have discussed, will transfer this outgoing to main account. So this is the like shifting entries from outgoing to incoming, but these will happens only once actual transactions happens in bank accounts, right? Because we are transferring these outgoing or incoming accounts to main accounts based on the bank statements. So once the transactions happens in real time in the bank, then only we are going to be transfer these. Okay, so now we will discuss like how we process statements in SAP. So there are two ways to post the statements in SAP. So we can do it manually, but most of the companies now to reduce the work will use the automation, right? So we have EBS, and it could be in different formats, text file, it could be text file, it could be some other formats, and these are the examples of the this bank statements, right? So most popular is MT940. So this is the example of MT940. This is kind of a text file. So we are going to be receive this text file from bank, or it could be possible that we can also download from the bank sites. So again, it's depends, right, how we have integration with the bank. If we how can we get this statement? Okay, so see here how we can get. So we can download from server if like we have the access, we can download from bank sites. If we have the integration, right, between SDFC to SAP, and definitely we need some middleware, and it is PIPO, it could be any other middleware application as well. So SDFC is sending these statements to PIPO, and from PIPO it's coming in SAP, and from SAP we are processing these bank statements. So this is the business process in SAP, how we work. And might be if suppose in real time we'll go with bank, and will ask, okay, just give the statement. So most probably they will give the in hard copy, right? And might be they can also share in the PDF file over the email. But in the businesses, we have a number of transactions, right? And we have to be shift these entries from outgoing or incoming account to main account, right? And a lot of bank charges are also we have to be process that. So if suppose, just imagine if I'll just get these in PDF file, I have to figure out all these transaction which is not posted in my books of accounts, and then I will post all these entries, right? So this has been automated by ERP application, and here we are talking about SAP. So now SAP is providing this service that by automation, by using this EBS, right, electronic bank statement features. So we can just process it automatically, we don't need to be figure out it manually, right? So system will do that. And how it will happen, it will happen based on the configuration. So we just need to be upload this file, such kind of text file in the SAP, and system will figure out everything, that what should be debit, what GL should be credit. And we can see in detail that how technically it happens, because we have the complete EBS configurations, so we can uh, understand in depth that how it happens. But as I mentioning that in ERP application nowadays, it's very easy to process such kind of a number of files, right? So all these even companies use such kind of processes in day-to-day business to post the EBS. Okay, so if we have connection, so we can get it. Otherwise, we can download it. And once we have such kind of file, what we'll do? So we'll just upload this file, right? And upload. We have two options. We can just manually upload, right? By ff_5 is the T code. We can upload such kind of file. Once its upload is done, so you can see the accounting entries in the SAP. It could be possible that some accounting entry has been failed due to multiple reasons. So if it's failed, we can check in the fee band, that is post processing T code, right? And it also could be possible that we don't need to be done it manually. We can it automate. How we can automate? We can create a batch job, right? So what will happen? Bank will send this file to our SAP through PIPO, and it will store in a some folder in L11 directory. And in batch job, we have set a program. That program is the same, this ff_5, right? So in the background, this batch job will execute this program and pick the file from L11 directory, and system will process the file in the same way as we are doing it manually. So but it is automated through batch job. So once it's processed, so we can see that system will post the accounting entries in the system. So this is the process in SAP. How we do this process this bank statements. This is called the EBS, electronic bank statement. There is also a manual way, right? So if we don't have such kind of text file, if we have PDF file, then we have to be do it manually. Not 100% manually. It is partially automated. So we have to be put all these transactions. We have to figure out all the different transactions, and like bank charge and other transactions. Then we have to be put it manually on a screen, and then we have to be process it. So accounting entry will be generated manually, but we have to be figure out all this. So it is really like time consuming task. But these all these companies nowadays using this EBS processing. It is automatic. And okay, so we have just discussed this, and might be next video what we are going to do. We are going to be discuss this EBS configuration in detail. Okay, so hope today you are clear with these concepts. What I'm trying to explain here, like the bank statements, and about we have talked about two parties. We have talked about the books of accounts of two parties. We have talked about what is bank statement, and we have seen what could be the transactions. We have seen how like parties books such kind of transactions, and how we can get some differences in both books of accounts. We have compare it, right? And we have compare it here. Let me show you. Yeah, we have compared it here. So how we get these differences. And now what we can do if we have differences, so we can create a bank reconciliation statement. So in this way we can do that. And in SAP we have understood the concept of different GL accounts and why we use. We have explained, and we understood that it's easy to be like figure out the balances in bank from main account, and we'll track first from incoming and outgoing, and later on we'll shift once we'll get the bank statement, we'll shift these incoming and outgoing accounts to the main accounts. So then we have discussed about the how we do process on this bank statement in SAP. Okay, and we have discussed about these integration bank and between the SAP, and we have seen the post processing T code as well. So okay, like we have just missed out the technical things, the configurations. We'll discuss in next video in detail. Thank you very much for watching this.